Hello, YouTube, and welcome back to another video. My name is Justin, and today we're going to talk about how everyone on the internet is an oil expert. So, over the weekend, I heard that everyone knows where oil's going to go. A recession is imminent, and we're going to try to understand exactly what that means for the charts and for stocks this week. Basically, meaning our oil price is going to crash the stock market. I'm seeing a lot of keyboard warriors out there, and I think that this is exactly what I saw when I thought we were going to reverse at the end of last year. So the comments that I saw over the weekend video and what I'm seeing online, like on Twitter, I think we're actually much closer to a bottom than to a top right now because retail is dumb. That's why they call them dumb money. And I don't think they really know what the oil market even does or what it means or the ramifications for the stock market. They're like, oh my God, the future market's down. It's over. SPY to zero. If you don't trade the futures market, I would highly encourage you to tune that noise out and check in on Monday morning at 8:30, an hour before the market opens up, when we start to settle. Because over the weekend and overnight, most trading is not done in America. It is done everywhere else. And I actually have the perfect article to go through that to explain it. Before we have a look at oil, which we will in a second here. Oil, again, Brent crude, light crude is roughly at about 1617 right now. So we can see here that we're getting a shooting star here on sweet crude, light crude, sorry, CL1, and it's filling the gap. There's some headlines that are causing that. But the first thing I want to point out here is just an article. This is from February 28th. It's currently March 7th. For U.S. traders, overnight stock futures have been a mirage. Deep losses have been pared back for 3 straight sessions. Volatility has been a feature of equity markets in 2022. Isn't that exactly what's happening here? Like, exactly? We'll look and see at the overnight session now. We're currently at 43.20. We're down by 0.16%. Does this seem like a mirage? It does to me. So again, looking here, we'll come back to ES in a minute here. Let's look at sweet crude first, understand what's happening. Then we'll come back. We'll look at the market. And if you are enjoying the video at any time, please smash that thumbs up and drop me a comment. I read and respond to every single one, and we will make an effort to engage with people. So looking here, we can note that there's been a notable tick down. Again, it gapped up huge, right? Went as high as roughly 130. Everyone's like, oh my God, it's going to 1 million, oil forever, oil to 1 million. It's not going to happen. So we can see here that, again, massive leg down, but notably in the last 3 hours, we can note that we pretty much filled the gap and it's just hovering here on pretty heavy volume. The reason why is because Germany has no plans to halt Russian energy imports. Why? If these people want to keep the lights on, they need energy. And the reason why it matters is because they don't have alternatives right now. If you want to pipe in LNG or you want to have oil come in from America, it takes years to build that. So right now, Germany's in a pinch. They're dependent on Russian oil, whether they like it or not. Second headline here from Sholz. EU energy needs can't be secured without Russia imports. I'm not the one telling you this. This is the German chancellor. Third one here, Sholz. Diversifying EU energy can't happen in near term. Why? Because like I said, you can't just be like, oh, we want to keep the lights on and we don't have energy, so let's keep the lights on. It doesn't work like that. You need to have an energy source, and getting energy independence or new sources of energy takes time. So no one's really done that. And as of right now, the EU wants to punish Russia, but it's more important to keep the lights on. So again, I like having my lights on. I like my internet working, and all of that stuff requires energy. Moving forward here, again, Ukraine presidential advisor says new talks with Russia will start at 4 p.m. Kiev time, which is actually right now. So I'm seeing some glimmers of de-escalation and some glimmers of world peace potentially happening. Keyword there being potential. And the ramifications of oil global economy is this. The ramifications are that Russia swaps show 80% chance of default on ruble payment decree. And what that means is that any money that is foreign denominated, meaning priced in US dollars, has a big chance of actually defaulting. And this is the bigger risk than actually oil. Why? Because, again, Stephen Roach says Russia default would hit emerging markets and China. And the reason why this one matters to me is because this is what contagion is. Oil prices can come back down if there's a resolution like we're seeing right now. Look at that big gap being filled. However, if a country defaults, what usually happens? It causes contagion because the people who are exposed to the Russian debt are now going to have their own issues. And if they are forced, what generally happens when you are going into a A contagion area is that, again, let's pretend that you got $1 billion in stocks and you got $100 million in Russian stocks. Well, if now your 100 million in Russian stocks is bad and you don't want to sell them, you have to sell something else to make your margin call. So what does that mean? You're selling stuff you normally would not want to. So if this headline here is correct and Russia does default, it's going to cause an issue for all emerging markets, including China. That's the bigger issue. It's not oil, it's debt. So that's what's important to keep in mind here. And now, as we shift forward to the charts, I don't give a fuck about your MACD, RSI, or whatever the fuck you think is going to tell the charts where it's going to go. What's more important is the price. So in terms of how I like to do technical analysis, I don't care what indicator tells you that we're going to go where we are. And sorry for swearing, but I feel it's warranted because what you want and what you get in the stock market are two different things. When everyone was calling for 20,000 Bitcoin, where did we go? It was like roughly 25. Like Mason called that. When everyone was looking for 5,000 SPX, where did we go? Roughly 4,800. It got close enough, but not quite there. So the market is never going to be black and white. It's always gray. And the reason why that's fantastic for us is because everyone can vote, everyone can put their dollars to work, and Mr. Market rewards those who are properly positioned. If you're not, you get punished. If you are, that's where you make the money. And being a contrarian is where you make the biggest money. Why? Because when everyone's looking at one side of the trade, who's left to buy? Oh, that's right, no one. So when every person, again, including people who have no idea what oil is, what economics are, what the stock market is, are telling us that, oh my God, oil here, oil this, recession that, blah, blah, blah. Who's left to be bearish on the stock market? Who? I don't know. I don't see anyone out there who is saying that it's time to be bullish. That's what gets me bullish. And again, looking here, we're at 16. We're very fearful right now. There is a little bit of technical damage on the charts, but for me, again, the reaction to the news is more important for me. If we see that, actually, I want to take a quick step back here too. So I want to also explain that in the video from this weekend, what I tried to specifically explain is not that we're gonna bottom on Monday, and they're like, oh my God, a gap down on Monday, Justin's wrong, we're never gonna go higher. What's important to keep in mind here is that just like when I laid out my bear thesis for 2022, it was a preview for the future. For what if we're wrong? What if we're no longer bullish and the trend changes or we go down? That's what I was trying to lay out here, where what if we are bullish? Because it gets a little bit repetitive to keep saying that, oh, we're bearish, we're going to go down, here's the reasons why, blah, blah, blah. And on Friday, I was impressed by the bulls. I was impressed. I don't say that often. So the fact that I was impressed and trying to think about, again, expect the best, prepare for the worst, and be ready for the surprise. If I'm going to be wrong, I was trying to lay out my thesis for that. And it is still only March 7th. It's nowhere near the end of the month or the end of the quarter. What I was trying to do is lay out a thesis for you so that you can think about, what if I am seeing price action that contradicts my bearish thesis? At what point do I know that I'm wrong? At what point do I know that I'm still right? That's what matters. It's not about being right. It's about making money. And if you're in the business of making money, you have to be able to shut out the noise and focus on what matters to you. If that's your RSI or MACD or whatever, I would encourage you to delete it. But if it works for you, make sure it's consistent. It doesn't just work once. And you're like, oh, well, everyone else is looking at this, so it better be right. Here's what matters to me as we go forward for the rest of the day here. First thing is going to be, what does the dollar do? Why? Because right now, the E-mini futures, which is the S&P futures, are currently down by about 0.24%. If we didn't have all of this news over the headline, and it was a normal Monday, this would be normal. Down by 0.25%, who cares? And when we look at what is driving this, it's going to be largely the dollar. The dollar is currently up by 0.28. So what's more important than what's happening to ES right now in the short term for me is whether or not DXY penetrates 100 and holds it. Why? Because if DXY, which hit an overnight high of 99.4, breaches 100, we're going into a massive bull chart. And again, we talked about this on the weekend. When there are foreign denominated debts or there's assets that are being liquidated, they are priced in US dollars. So if you're selling your assets, you get US dollars in return, which creates an artificial lift for dollars. And now we're seeing that with the news of the Russian imports potentially not being banned, we're seeing the dollar move back down. However, there's something called a breakout. So in a massive W like this, like we often look at on this channel, if we break above 100, 100 is going to become support, which means that the current levels on S&P are going to become resistance. So that's what's really important here. Does the dollar break 100? How does it happen? And as we look here at the market, what I would encourage you to do is to look at what happened here in terms of the volume. So yes, we did print not only a lower low versus Friday, we also printed a new weekly low. So technically speaking, the ES has some damage here, but is it closer to the high or the low? Did the negative news push us down harder than the good news pushed us up? The answer is no. The good news pushed us up higher than the bad news pushed us down. So if bad news can't drag us down as much as the good news takes us up, what does that literally tell you? The bears are likely covering. The bulls are getting eager to buy because there's so much cash on the sides. So stop trying to be a genius and just look at the chart. It tells you what's happening. So in terms of what's going to happen, what matters for today, I'll show you what matters for today. For me, again, I am not Nostradamus. I can't predict the future. All I can do is have a ready playbook to know exactly what I want to see. And what I noticed before, when I logged on this morning, we were talking with the key area when I recorded the weekend on Saturday. When again, I don't know what's going to happen on Sunday night or Monday morning when I record on Saturday. But looking here, the low on S&P for Friday, 42788. Okay, cool. What's the VWAP on the E-mini futures right now? 4275. Oh, crap. That's like almost exactly the low from Friday. Yep, that's almost exactly the low. So you should understand what that means. If you don't, you probably shouldn't be trading stocks. What that tells you is that overnight, the VWAP or the volume weighted adjusted price is right at our key support area. So if we're going to dive down and that VWAP holds, that's a strong buy. It's not a short, in my opinion, as long as the low holds. So as of right now, we have strong support on the chart that overnight printed a new low, but the VWAP is currently right around our key area. And what matters more than the overnight price is the cash market price. Why? That's where most volume happens. Even with the move that we had on that headline, do you even see the volume bar here? It's barely even visible. It's tiny. So if most of the volume transacts between 9 and 4:30 p.m., what time of the day matters more? 9:30 to 4 o'clock, period. So looking back over to here, it tells us that everything from the weekend is still valid. If you want to know more about what that means, I encourage you to watch the video from the weekend, which we'll queue up in a moment. But otherwise, if you had the big bad bear thesis going into this weekend, and now you're seeing that potentially I might be wrong, maybe don't trade today. It's going to be a very long week of trading. It's just like trading through the US-China trade talks where we're moving on headlines. And if you don't know how to decipher the headlines like an algo can, don't try to pretend you are an algo. Algos are faster than you, they're smarter than you, and they don't have emotions. We are emotional human beings, which means that we are vulnerable to when we're doing well and to when we're not doing well. So if you are wondering what to do today, the best course of action might be nothing. Wait and see what happens if we do dive down in the morning. Last thing, actually, one more thing I'll show here. The other reason why I'm a little bit bullish going into today is because of what happened on the DAX. Again, Germany is the country that is the most impacted by this period. So just looking here, again, this is 15 minutes delayed, but it's reclaimed 13,000. It was down by a limit overnight. It was down 4%. What did it do now? It's filling the gap. So it filled the first gap. It fills that one, might go up to the next one. Let's look and see what happened as the market opened here. Oh, it gapped down, pumped up. Isn't that what a bottom is? Oh, let's look at the VWAP. Where does that line in? Oh, crap. Really? It gapped down to the VWAP, pushed down a little bit, and then rocked up. Yes, because FDAX overnight did the same thing ES did. So this is what I was literally calling out for here. So if we're going to form a bottom today, and that's going to be the low, we cannot afford to not set up this pattern. So watch the VWAP, like I mentioned before, watch how we react to it. And if you have a bear thesis and you want to play bear, know exactly what level you were wrong at. And if in doubt, get out. There is plenty of trading left for the whole week. And we don't know what the trend is. We got to close today's daily bar out before we know. What's the early feedback for the rest of the week? With that said, I wish you all the best of luck today, and we'll see you tomorrow for the next video. Thank you.